Hello ladies and gentlemen, welcome to the weekly market breakdown, and I'm excited to bring you this episode. Today is Sunday, so guess what? Every Sunday you are going to be getting the weekly market breakdown uploaded to our YouTube channel, and in this episode we are going to pick one pair. Of course, if you want more pairs you have to be inside the community, so we're going to pick one pair and we are going to analyze that one pair and of course see where the opportunities are lining up for the week, of course, and the month ahead as a whole, because personally I like to look at big picture, monthly time frames and all of those things, so they give me a great depth of clarity, and that's exactly why I am bringing that to the public domain here on YouTube. So for today, we're going to be looking at GBPUSD, and it's a very fantastic pair. It has shaped up very nicely in the coming weeks and months, of course, in the past weeks and months, and of course, it's shaping up, for big moves just up ahead. And that is exactly why I am bringing you this, that's exactly why we're looking at it today. So let's quickly dive into the chart, shall we? Looking at GBPUSD here on the monthly time frame, I need you to understand, of course, if you know me for a bit of time, you will know that I come from the ICT school of thought, and you need to understand that one of the paramount things that we look at is that we want to see where is the next draw on liquidity likely to be. And of course, what I have here, the next draw on liquidity is likely to be at 1.31423. That's exactly where the next draw on liquidity is likely to be. And looking at current price action, I think this will go down as one of the biggest misses of my career so far, because I had the opportunity. I was buying GBPUSD at the freaking lows sometime last week. I was buying at the lows, although I bought at 1.27069, and the market did stop me out, and after that the market just rallied to the upside. But one thing we're expecting in the coming weeks and month is that we're expecting price to move up and tag the 1.31423 level. That is the level that we're expecting price to trade into. And of course, the moment price trades into that, we're going to be looking at the inverse side of it. We're going to be looking at the inverse side of liquidity, which is at 1.31611. We're going to be looking at that zone for some short-term sells. So of course, we don't know how long the sell is going to be, if it's going to be a big sell-off, but of course we're going to be looking to see sells coming into that zone. But right now, where we have our eyes on is on the buy side of the market. And how do we begin to position ourselves on the buy side of the market, looking at current price action? So looking at current price action, you can see we had the first impulse, we pulled back, another impulse, we pulled back, and of course now you can see the market is generating another very fresh impulse, and that you can see how aggressive it is. Barely a downward wick, and of course barely very little wick here to the upside, just a full body close candle up there. So what we're looking at, what we're likely to see in the coming week is, if we do not pull back into 1.2817, of course that's the kind of pullback I would favor to get a very fair entry. There is a very good chance that we might be able to get a pullback at 1.2860. so that's where I am looking to see price trade back into. That will now be slightly above the old high that we traded above, of course, and now we're trading back above that old high. So we're likely to see price trade back into the zone. And of course, this is where we are going to be getting our buys from, right inside of these areas going forward. So this is exactly how you want to be looking at it if you're looking at it in the coming week. And of course, if we get down to lower time frames, that provides us an even greater clarity. The support and resistance traders are going to love this one, because it lines up perfectly with what support and resistance looks like. So I think if we go across the board, this is exactly what it looks like here. So basically it's a classic break and retest situation, even though that is not how we look at it. But of course, I mean, the market, whatever works for you, it's very, very fine. None of us has the ultimate, none of us has a crystal ball that sees all these things, but however you trade. So the support and resistance guide, the break and retest, this is a very, very classic opportunity for you to, get that retest inside of this area, and, you get long. So one thing I'll be telling you is, when you get into the new week, no matter what the price or the market does on Monday and Tuesday, please try to ignore it. Those are the days where the market tends to, set the traps and all that. So what you want to see is, you want to see a market that pulls back into the zone, into the I think that's a 1.2860 zone. So you want to see a market that pulls into the 1.2866 or 1.2872 zone. When the market pulls into that zone, that is exactly where you want to be getting long. All right, so that's exactly where you want to be getting long. And of course, I think based on the order block, that should be one there, but that's exactly the zone where you want to be getting long and taking those trades at. So of course, getting down a lower time frame, it's just basically the same thing. It's basically the same, support and resistance level. We trade above it, and that's it. But this is, coming from the ICT school of thought, this is, the inverse of that. Of course, when the market trades right back into the zone, this is exactly where we are going to be getting all those plenty of buy opportunities. Having swept this liquidity here, this was where I did get long. I did get stopped out on this candle here before the market turned around. So, and of course, then I did take some buys in here, some minor buys in here as well. So that's exactly how we're going to be looking at it. So in order for us to determine where our entry is going to be, you want to take your Fibonacci and measure from the high to the low. And personally, I do not like to trade anything that is, if I set this up properly, you're going to see that what I have lined up here is what you refer to as the NCZ. So the 382 for me is the no trade zone. I prefer to see 50% or 618, or that's 62%. So that's basically the optimal trade entry. But for me, from 50%, fantastic zone, 618, fantastic zone. So that's exactly what we're going to be looking at. And if you're looking at it based on optimal trade entry, then you should not be taking a trade until you get to 62% level. So personally, this is exactly what I want to see price do. If price does not, retrace back into the zone, I do not take any trades whatsoever. I will not be taking any trades at all. I will not be buying this asset. And of course, it's risky. It's far riskier to, of course, there's a chance that the market has taken this liquidity here at the top, but I do not want to be selling against this type of impulse, because these are situations where you find yourself where you just trade up and then it goes and then it comes back down, and by the time you have taken 2 or 3 losses inside of the zone before the market comes back down into this area, and then you have your buy opportunity. And for me, that's not a very, very good way to trade at all. So the ultimate thing to do will be to wait for price to trade into the zone, and then you take your buy from here. And of course, I'm going to encourage everyone to do the same. So quickly heading over to the commitment of traders report, we have on GBP here. You can see that we went all the way, even though lately we've had a decrease in the net positioning. We went from 132,000 down to 147,000. But I want you to also remember that we are coming from 20,000 minus a negative 20,000, a negative 68,000, all the way to a positive 47,000. So this is a huge opportunity for us to actually be getting long, because the net positioning is actually positive. The net position is actually positive. So what this 47,000 here could actually be is that this could signal an opportunity for us here to actually get that sell or that correction that will pull price back into all of these zones here, and pulling price back into that zone is going to afford us plenty of opportunity to be able to get long in this type of area here. So that's exactly what we're going to be looking at in the coming week. And of course, the first target is here right at this high here at I think that's 1.3045. yes, so that's 1.3044. Well, just call it 1.3045. So I basically now know what GBPUSD is looking like across the board. So that's exactly what we are going to be looking at across the board. So this is the trading opportunity. We have the first high here and the second high right at this top here. So of course, ladies and gentlemen, if you want to, you can easily join our community. You can join the free Telegram group. There's a free Telegram where we share some of these analysis as well. There's a free Telegram group. When GBPUSD was at these lows, that analysis was shared to the Telegram group. Of course, I'll probably link that in the screen or show that in the screen right now. So that analysis was shared within the Telegram community as well. So please make sure that you follow the link in the group, follow the link in the description, and join the free Telegram channel as well. So that's it. And of course, if you've not subscribed, this is a fantastic opportunity for you to do so. We're going to be having the weekly market breakdown, of course, picking one pair and analyzing it every Sunday here on the channel. Of course, more content will be coming in within the week, so please make sure that you don't miss it. And I wish you good luck and good trading. Cheers.